Welcome. In this chapter, we shall learn import costing, customs duty, classification, HS code number. We welcome to this project of learning export and import trade. Enjoy learning. Thank you. The import is often thought to be easier than export, but there can be many traps for the inexperienced persons, and it is important to understand the basic steps before an order for import is placed. The process of import can be explained in the following major steps. To search potential suppliers, get catalog, samples, price, and terms of payment. This information can be obtained from the exhibitions, Chamber of Commerce, industry associations, foreign embassies, councils, government, internet, and exporters' website. The price should be clear for Incoterms. Incoterms are published by the International Chamber of Commerce (ICC) and represent the foundation of the interpretation of trade terms between the countries. Use of Incoterms reduces the ambiguity between importer and exporter in understanding the factors of cost. To select a customs broker CHA to assist in the process of import. The customs broker expedite quick, trouble-free clearance of goods from customs and other government authorities. They are experienced in valuation, custom duty, classification, trade concession, freight, and process. To visit bank for financial facility, cost of finance, method of payment, mode, bank charges, and margin for TT, LC, etc. To prepare cost analysis to arrive at landed cost. All costs such as freight, handling charges, insurance, and customs are taken into account. Calculating the landed cost or imported products is most important step. We have to check from Incoterms what price is already included in the quoted price. FOB free on board includes ex-factory price, inland transport and handling charges at port of loading. CIF cost insurance freight includes ex-factory price, insurance and freight to the port of arrival. FIS free into store includes ex-factory price, insurance and freight to the importer's warehouse. Ex-factory price is the price charged by the supplier in the country of origin. In some cases, the costs are not built into the quote by your overseas supplier. The price will then include ex-factory price plus inland transport within the country of origin to the port of departure. It is called POL. Handling charges at port of departure, for example, inspection and loading charges. Freight, cost of getting goods to India, POL to POD. Insurance, insurance of goods whilst in transit against damage, loss, or theft. Local handling charges. At port of arrival, for example, unloading and storage at port warehouse. Interim storage charges. For storing the cargo prior to the receipt in your warehouse. Demurrage charged on delays in clearing the goods. Free days are available and it differs in shipping line. Also, free days can be negotiated. Quarantine fees. This is for storage of goods. Usually live stocks are kept in quarantine. Customs duty. You can check the customs department or your broker for the rates. Computer program and books are available to arrive at customs duty. Sales tax. Say a percentage of value of taxable importation. Goods plus duty plus freight plus insurance. Import license fees. Check customs department, DGFT or your broker for the rates. Fumigation fees for treatment of goods by fumigation process. Transport to local warehouse. Testing and certification for safety compliance. Customs brokers fees for facilitation of importation process. Exchange rate fluctuations. Depending on transaction, currency can be covered by hedging and forward contract. Insurable, but it can be costly. Repacking or relabeling. To either comply with the local regulations or to enhance marketability. Barcodes, MRP provisions. Bank charges for processing of transaction and money transfer. Import. Is it commercially viable? Once we have arrived at landed cost, we add selling expenses and profit to arrive at a selling price. In case the goods are for sale in India, we have to judge the commercial viability. Having arrived at a landed cost and investigated the marketplace to determine what your selling price should be, is there sufficient margin remaining to cover all your business overheads and leave acceptable profit? In case of raw material or capital goods, it will have an effect on the production cost and cost of the project for manufacturing. Identify any special requirements. Establish if there are any special requirements such as import quota restrictions, certificates required to import restricted goods, or special inspections on arrival. The customs broker CHA can advise you on these matters. You can check in related books or computer program. Place an order with the supplier. Request a written confirmation of receipt and acceptance of the order. Ensure the terms and conditions of the contract of sale are clear to both parties. For example, product, quality, specification, quantity, price basis, payment terms, date required, freight arrangements and documentation. Advise your customs broker of the details. Unless you intend to clear the goods yourself, provide your customs broker with comprehensive details of the transaction and copies of the relevant documents to facilitate trouble-free and speedy processing and clearance of the consignment. Your broker will advise you when the shipping documents have arrived and make sure they are in order before you accept them. When the goods arrive, make the arrangement for your customs broker to clear them through customs and quarantine if applicable. You will need to provide the bill of lading or airway bill, commercial invoice, insurance, certificate of origin, write-up or catalog, and any other relevant documents. Take delivery of the goods. Examine the consignment immediately for insurance purposes. Give a clean receipt for the goods only once you are satisfied as to the quality, quantity, and the condition. Fast unloading and return of container to ICD. Detention charges for container and truck are applicable. The import costing means cost included for goods up to the receipt at importer's warehouse. A shipment can comprise of a single purchase order or multiple purchase orders to be received over a period of time. These orders can be at any stage by specifying relevant exchange rates and applying defined shipment costs. Based on the newly calculated unit cost, selling prices can also be calculated. When the costs have been finalized and the goods received, the shipment can be processed to update the inventory and purchase order files. Submit the bill of entry to the bank. General ledger postings are automatically set up and a supplier's invoice is created. A history of each shipment is retained for later viewing of reporting. A sundry shipment statement is made to see the stocks items cost and selling prices set in advance of the placing any orders. This calculation is beneficial to the importers who need to finalize the prices before receiving the orders from the customers. We can have computer program which allows new shipment to be created and existing shipment which are still in transit to be altered. We list all the outstanding orders for a nominated supplier. Shipments are constructed by selecting all or a part of the details item. Shipments are automatically assigned a shipment number and stored in a shipment file. Detailed lines can be added and removed from the shipment at any time, and quantities in a shipment can be modified at any time. Additional details relevant to the shipment, such as due dates, exchange rates, country of origin, and shipping line, may also be entered and stored in computer as a reference with each shipment. Costing through computer program. Shipment to be loaded and costed. The shipment is totaled and converted to local currency at a nominated exchange rate. Cost may be apportioned by quantity, value, weight, volume, percentage, or manually. To perform what if analysis to see the effect of changes in the exchange rates and shipment cost on the final landed cost prior to processing. Compare the old cost, new cost, and current selling price as well as margin based on the landed cost. Costs should be recorded as they are received with the shipment so that the costing can be updated over a period of time. Selling prices can be changed, such as specifying a required margin or by maintaining the previous margin. Import duties and taxes when importing into India. Overview Import duty and taxes are due when importing goods into India, whether by a private individual or a commercial entity. The valuation method is CIF, cost, insurance and freight, which means that the import duty and taxes payable are calculated on the completed shipping value, which includes the cost of the imported goods, the cost of freight, and the cost of insurance. Duty, in particular, is calculated on the sum of the CIF value and landing charges. Some duties are also based on quantity measurements. In addition to the duty, imports are subject to other taxes and charges such as landing charges, countervailing charges, cess, and education cess. Additional duty is special additional duty. Duty rates. The duty rates in India can be ad valorem as a percentage of value or specific rupees per unit. Duty rates vary from 0% to 150% with an average duty rate of about 12%. Some goods are not subject to duty, for example, laptops, cell phones, and other electronic goods. Sales tax. There is no sales tax in India for imported goods. Minimum threshold. There is no minimum threshold in India. For example, all imports, regardless of their value, are subject to duty and taxes. Other taxes and customs fees. Landing charges 1% CIF, countervailing duty CVD 0%, 6% or 12%. This is CIFD plus landing charges. Cess, education plus higher education 3% duty plus countervailing duty. Additional CVD 4% CIFD plus landing charges plus countervailing duty plus cess. We should always check the rates as these changes with annual budget. Local customs office and contacts. More information on import declaration procedures and import restrictions can be found at the Indian website. What is ITC code? ITC means Indian Trade Classification, also known as Indian Tariff Code. This schedule has two parts. First schedule, which an 8-digit nomenclature, and the second schedule with description of the goods chargeable to export duty. The first schedule is based on HS code system. The Indian Tariff Code has 8 digits, which has been designed in such a way without any modification of first 6 digits as per HS code systems, but followed by another 2 digit classified as tariff item. What is HS code? HS code system means harmonized system code. In some countries, HS code is also known as HTS, Harmonized Tariff System. HS system has been developed by World Customs Organization, uniformly applied by more than 140 countries worldwide. HS code classifies goods as 4-digit heading and 6-digit subheading. 4-digit heading followed by 2 digits. Customs Department of more than 140 major countries have been functioning on the basis of said 6-digit tariff code. ITC HS code list of India Harmonized System Code. ITC HS code, or better known as Indian Trade Clarification based on Harmonized System of Coding, was adopted in India for import and export operations. Indian Customs uses an 8-digit ITC-HS code to suit the national trade requirements. ITC-HS code schedules. ITC-HS codes are divided into two schedules. ITC-HS import schedule describes the value and guidelines related to import policies. Schedule 2 describes the rule and regulations related to export policies. Schedule 1 of ITC-HS code is divided into 21 sections, and each section is further divided into chapters. The total number of chapters in this schedule is first number is 98. The chapters are further divided into subheading under which different HS codes are mentioned. Export Policy Schedule 2 of ITC-HS code contain 97 chapters giving all the details about the guidelines related to the export policies. Governing body of ITC-HS code. Any changes or formulation or addition of new codes in ITC-HS codes are carried out by DGFT, Directorate General of Foreign Trade. Commodity descriptions, weeding out of disparate codes, addition of new codes, change of product descriptions, etc. are taken up periodically as a part of ongoing process. Here are ITC-HS code major 21 sections. Animals and animal projects. Vegetable products. Animal or vegetable fats. Prepared foodstuffs. Mineral products. Chemical products. Plastics and rubber. Hides and skins. Wood and wood products. Wood pulp products. Textile and textile articles. Footwear, headgear, articles of stone, plaster, cement, asbestos. Pearls, precious or semi-precious stones, metals, base metals and articles thereof. Machinery and mechanical appliances. Transportation equipment. Instruments, measuring, musical, arms and ammunition. Miscellaneous, works of arts. Thanks.